Life Inspector. It's Sunday, May 25th. Happy Memorial Day weekend. This will be the video of week look ahead for the YieldMax option income strategy funds that we cover. AMDY, AMZY, APLY, FBY, GOOY, MSFO, and NFLY. That's for Advanced Micro Devices, Amazon, Apple, Meta, Google or Alphabet, Microsoft, and Netflix. So before we get into it, if you're interested in the week look ahead and distribution guesstimate for the weekly pairs, ULTI and LFGY, that video is available. As well as if you're interested in how I did trading this past week, that video just went up today also. Okay, so now before I get too deep into it, I will tell you I haven't been covering them for the full 4 weeks, so I don't have 4 weeks worth of data. I'll be relying on other sources as well as deferring to other sources as well. Obviously, Rod, retire on dividends. Most of you probably heard of my channel because he told you to come check me out, so I appreciate that. And so he actually, even though he doesn't cover these on his dailies anymore, he still talks about them on his guesstimate. So I would advise you to go check out his video, right? Retire on dividends. He went live today, right there. Group C distributions estimate. Okay, so I won't spend anywhere near as much time on the estimate. I would tell you to go watch his, so I'll just let you know what we have going on. All right, so AMDY is starting the week at 757 with AMD at 110. They've got their 110 as the synthetic position out till July 18th. That's currently worth $1.4 million, but they're not going to be closing that out, obviously. All the trading is done for Group C. So they're doing their calculations over the weekend. They turn everything in on Monday, and it gets announced on Wednesday. So, but they're still trying to make money because we're starting the next cycle. Monday's a holiday, so Tuesday. So for this coming Friday, they have calls sold at 117 and 118, pretty much even, 6,200 and 6,600 contracts at each. They are 6 and nearly 7% out of the money. As you can see, the majority of the fund money is sitting in treasuries. So there are 18,525,000 shares outstanding for that overall value of 140, bringing the NAV and the closing price Friday exactly the same at 757. So with that, the 30-day IV of AMD itself is 46.1%. So if you take the price of AMDY, multiply it by the underlying's IV, and then divide that by 13 because you end up getting 13 4-week cycles in the year, that would come out to 27 cents per share. But we know it's going to be more than that. How do we know? The last distribution was 33.65 cents per share. Came out to a 57% annualized rate. And in Rod's video, Retire on Dividends video, he does have the full month's worth of information. And he said that they earned 85 cents per share. So this would be the basement, the low, 27. But there's no reason for them to only pay 27 if they made 85 cents a share. But at the same time, they're not also going to give all of it. The fund says they're going to pay out 90% over the course of the fiscal year. So if you figure anytime you got a dividend on a month where they lost money, that's where it's coming from. On the months where they made money, they got to store some aside too. So Retire on Dividends estimate he gave them was 41 cents per share. So either way, pretty good idea that it should be better than last month's. So I I actually don't own any AMDY. I own a couple of these, but not AMDY. So on Wednesday, you will find out from YieldMax themselves how much they're going to be declaring. Next, AMZY, Amazon's YieldMax fund. Amazon closed at $200.99, $200.99. AMZY or AMZY at $15.58. The NAV was at $15.61. So if you got that at the end of the day on Friday, you got it at a discount because just the value of the assets is $15.61, and that's really all it is assets. It's not a company that you're buying stock in. 16,400,000 shares and 256 million managed within the fund. This one declares not this coming Wednesday, but the following one, so we don't need to talk about guesstimates or anything like that. They have a 185 synthetic for July 18th. Again, Amazon's at 200, so that is worth a lot of money, 22 million to be exact. And for next week, they have calls sold, nearly split even again, 6,066, almost 6,700 contracts, with call strike prices at 205 and 207.50. Those are 2 and 3.2% out of the money. They also purchase calls further out, so they create a credit spread, and this just limits how much they could lose if the stock went beyond the call strike prices. All right, so AMZY is looking good for the following week, but we shall see. APLY, APLY, covering Apple's stock. Another one, Group D, so it's not this coming Wednesday, but the Wednesday after is when they will declare. Apple closed at 195.27 and APLY at 12.64. The NAVs at 12.62, 9.5 million shares with nearly $120 million being managed in the fund. Their synthetic is at 210, so with the stock price at 195, that's underwater, so it would actually cost money to close that out, 8.5 million. They've got till June 20th for that to turn around, so won't affect this one, but it will affect the next one. So we're going to need Apple to rise above 210 between now and then, or you're going to see some of the money that they made trade-in options have to go towards closing out the synthetic. Or Rod would call that a gold digger. I'm not going to sing. They have calls for next Friday sold at 205 and 207.50. The majority of them at 205. Those are just about 5% out of the money, and the others are 6.2% out of the money. FBY, you guys just got paid that. What is it? It's Sunday now, so you got your check on Friday, or you got your money deposited in your bank or in your account. And I'm wondering, did you guys already spend it? Did you buy more shares? Do you have a drip going on, or what are you doing with it? Saving for dips? Meta closed at 627.06 with FBY or FBY at 15.45. The NAV was 15.47. So again, if you purchased at the end of the day on Friday, you were buying it for less than what it's worth. There's nearly 10 million shares with 153 million being managed in the fund. This is another one where the synthetic is currently underwater. It's a July 18th, 660 strike. With the stock at 627, that means it would cost nearly $7 million to close it out currently. They have 3 different strike prices for calls sold, 642.50, 645, and 655. Those are 2.4, 2.8, and 4.4% out of the money. So as with all of these that I've mentioned, you're looking for the stock to trade up but stay below the lowest call strike price, in this case being 642.50, as a way to make the most money, to increase the value of their synthetics while being able to keep the maximum amount of credit that was received on selling the options when it comes time to close them. All right, GOOY, covering Google or Alphabet. The stock closed at 168.47. The YieldMax fund closed at 12.09. Again, 1 cent less than the NAV. There was an increase in shares on Friday of 375,000, bringing the outstanding shares up to 9.5 million. Just about $115 million being managed in the fund. 17 days till the next declaration. I forgot to tell you the days on FBY, but you just got paid, so you're basically a 4-week cycle minus the last couple of days, so 24 days. All right, 17 days. So not this week, not next week, but the following Wednesday is when GOOY will declare. So we're not worried about guesstimates right now. They have a 160 July 18th synthetic. They're at 168 right now, so that is currently worth $6.4 million. Calls sold at 172.50 and 180. About twice as many in the 180 range. So those are 2.3 and 6.8% out of the money. And they like to keep these. This is a $5 spread, and this is a $7.50 spread. Just kind of keeping it close so they don't lose too much in the event the stock goes up too fast. All right, MSFO covering Microsoft. This is another one, Group C, that will be declaring this Wednesday. Microsoft closed at $450.18. MSFO at $17.48. The NAV was $17.46. 6.7 million outstanding shares. $117 million being managed in the fund. We'll talk about the guesstimate for a minute. So, not a lot of volatility in Microsoft, which is the underlying 21%. So that's what they strive to pay. So if you just based off of that, MSFO's strike price times 21% divided by 13 comes out to 28 cents. So we'll call that your rock bottom here. But as we learned in Retire on Dividends video, Microsoft earned $1.95 a share. So that's obviously, they're not going to pay the bare minimum when last month they didn't pay the bare minimum, 52 cents, coming out to basically double, the annualized yield being double the IV percentage. So, but we actually think they're going to pay even more. Now, his estimate is 67 cents based off of that. But what do you think if they made $1.95? If you look back, they haven't paid something anywhere even remotely close to that. And even if you say, right, 90% is what they're aiming to pay out, but 90% was still like $1.70 something, I think. So $1.75. So they're not paying that out either. I like to say a higher number when they made so much, but when I'm already taking his numbers, I don't want to sit there and take his estimate and then try and better it. So, like I said, I don't have a full month's worth of information, so I'm counting on other people's. But the last time these funds paid anywhere near these numbers that the 90% comes out to, the stocks, their fund prices were much, much higher. So I don't see it happening. I don't see them looking to take a $1.70 hit on their ticker price. So they've got a 7/18, July 18th, 435 synthetic, with 450 being the current price. So that's worth $4.8 million currently. Most of the money in treasuries. And they just have all their contracts sold at a single strike price of $457.50. Pretty tight, 1.6% out of the money. But again, right, they're going to play each one differently. And when the IV of Microsoft is only 21%, you can sell a lot closer to at the money and not be too worried about it. It's not like some of the other funds we cover where they're picking the highest volatility numbers. So, not sure why I got that highlighter there. All right, and the last one is NFLY or NFLY, covering Netflix. Netflix closed on Friday at 1185.39 and NFLY at 1865. The NAV was 1864. There's 8 million outstanding shares and just under 150 million dollars being managed within the fund. Another one, Group C, right? It's going to declare on Wednesday. Their most recent distribution was 92 cents last month. Or actually, I guess it would technically be the very beginning of this month. Group C, I believe, got 2 payments this month. I could be wrong though. Yeah, I think I'm off by, I don't know. You know it. If you got your if you got 2 checks this month, you already know it. You don't need me to tell you. Okay, so if we just based it off of Netflix's 29.3% IV, it'd be 42 cents. So we will call that the low, but we're not looking for the low. If you watched Rod's video, they made $3.01 per share. So sure would be nice if they paid that. They're not going to. So his estimate was $1.02, and it's been a little while since they paid that. I think he said a couple cycles. So it's a shame, right? We're talking about getting paid out 1/3 of what they made. So it's just a guess, and this is his. So it could only go up from there. But I'm sure if you're watching them and you watched them make $3 a share and they're supposed to pay out 90%, you want to see more than $1. But you're supposed to get it all by the end of the fiscal year. So on the bad months, you'll get some when you shouldn't get it. And towards the end, I wonder if we're going to see some big payments from all these funds as we lead towards the end of the fiscal year, if they keep doing well and haven't paid it all out. So, all right, they've got an 11.40 as their strike price for their synthetic, with the stock at 11.85. So they are well in the money, and the synthetic is worth $6.7 million. They've got calls sold at 12.05, 12.10, and 12.25. The 12.10 is a pretty small amount, 60 contracts, but the largest being closest to the money, 756 contracts at 1.65% out of the money. Basically 1-3% out of the money on these. So another one, right? It's in the 20s on the IV, so they play it a little tighter, closer to the money to still make sure they get a nice amount of premium. All right, so that's it. So with each declaration, we start a new set of accounting and keeping up with the trades, and then I will have all the trades for the following month. So I like that. So time for the dad joke of the day. Hopefully you guys stick around long enough. If not, man, I might have to start announcing it earlier in the video so that you know to stick around for it. It's in the description though. But okay. Oh yeah, just want to say thank you as always. Thanks for watching. Thanks for everything. If you haven't already, please like and subscribe. All right, dad joke of the day. Where do polar bears keep their money? In a snowbank. My kids had to ask me, what's a snowbank? The dad jokes come from my kids too. It's a calendar they gave me. So, all right. Enjoy the rest of your long weekend, and obviously, I will talk to you on Tuesday because there won't be any trading on Monday. Good night.